Remember how difficult it can be to identify that key level to safely place your stop behind, and trading from which can lead to that long-awaited profit. A familiar situation, isn't it? It is for me, too. And if you can relate, stay with me until the end, because today, I'll be showing you pure practice. Nothing but practical application of one of the most important volume-based indicators. It works on any market, including Forex, and it's useful not only for active intraday traders, but also for medium-term investors. So, pay close attention, ask your questions, and let's get started. As you've probably guessed, we're talking about the horizontal volume indicator, also known as the volume profile. But not just any indicator. This is a drawing tool. To use this indicator, you need to go to this Trading View section, select the fixed range volume profile here, and now, first of all, it is necessary to understand the three main points in which the market can be. Three main states. So at any period of time, any instrument can be in three states, respectively. The first is a trend, the second is some kind of consolidation, and the third is the completion of a trend and the beginning of a reversal. In this situation, we have three possible trading strategies. By trend, where we will work after pullbacks. In consolidation, where we will work from the lower support zone or the upper resistance zone, especially in the case of its false breakout. And on reversal, when breaking through the last level where there was consolidation. In this case, buyer demand, from which movement did not continue, then a break of the level, and on the reverse retest, that is, approximately in this area. All of this, of course, looks beautiful in pictures, but we all know that on a real chart, it is very difficult to determine these zones, these levels, and where exactly the correction will go. And this is precisely where the volume profile helps us. And not just the volume profile in general, but specifically this particular tool, which allows us to stretch it over exactly the section of the chart that we need. Next, we will look at everything in practice and start with the first scenario, trading with the correction. So, if we see some kind of directional movement on the chart, we stretch our indicator from the starting point of this trend to its presumed end. That is, to the area where we might expect a potential reversal. Let's go step by step. Suppose the trend started here, and the movement went upward. We can already see that the zones of horizontal volume give us potential levels where a correction might occur. In this situation, we can see that we stretch the indicator up to this red bar of movement. On the next green bar, although only slightly, the price still touched this zone of previous volume accumulation. Looking further, we stretch the movement and see that a zone is now forming above, and it is actually quite significant, because the volume accumulated here was greater than in all the previous cases. Firstly, this signals that the trend may already be starting to transition into a correction. Secondly, in this situation, we can see that if the movement continues upward, this level represents the area where long positions were accumulated, and accordingly, upon a retest of this level, if there were indeed buyers here, they may begin to defend this range. To mark the range of interest on the chart, there are two possible methods. You can either use two trend lines to highlight the area, or, which is much simpler, use the rectangle drawing tool. Accordingly, we mark the area we are interested in here. You don't need to be overly precise or look too closely at this zone. We then extend the indicator further to the end of the trend. We can see that, at the highs, despite the fact that there were significant volume spikes, the buying interest has clearly faded, meaning that buyers are no longer willing to continue purchasing at these price levels. We can see that the volume accumulated here is relatively low, after which a correction begins, and first of all, we expect that the correction may end in the area of this volume level. Alternatively, we will consider a reversal if this area is broken and the level is retested. From this zone, one could potentially talk about the possibility of opening short positions and trading for a reversal back toward the previous zones, where we also saw volume accumulation. As for us, we observe what happens next. The index starts correcting, falling precisely into this zone, and here we could use the same approach, only on a lower time frame, switching to an hourly or 15-minute chart, drawing a similar volume profile. At this moment, we have a downward trend on the lower time frame, the 15-minute chart, and we can see where the volumes were accumulated. Once again, we can see the absence of selling pressure here. Sellers are not interested in pushing the price lower. The first buying activity appears, and we see that volume begins to accumulate in this zone. An exit from this volume zone on a shorter time frame and a close above it serves as a signal that the movement may resume, if we, again, are using a lower time frame. At the same time, the same pattern is visible on our 4-hour chart. We see several bars with relatively high volume, where the price failed to go lower, which could have been a good signal to enter a trade. At the same time, the risk is quite clear. It could have been set below this area or below the previous pullback, because if the price, in its attempt to move lower, had broken through this area, there would again be grounds to look for a reversal. Next, there was another retest of this zone, where we see a small accumulation of shorts at slightly higher prices. Here, a new level is also forming, which we mark on the chart. Accordingly, we then see a break of this area, followed by another retest to the downside, and from here again, an upward wave in the index, which continues to maintain the uptrend on the 4-hour and daily charts. In this situation, we do not see strong selling from the highs, and at the same time, we do not see buying interest accumulating volume at these prices. That is, we could reasonably expect a correction in this area where we saw volume. Again, I remind you that our profile is currently stretched up to this candle, so opening long positions here made no sense. On the contrary, with such low volume and during consolidation, it would have been reasonable to consider taking profit. Next comes another correction, again testing this level, and from here the move begins toward the next impulse of the upward trend. Once again, the risks are quite clear, either below this volume zone or after the price starts exiting it, forming lower lows. That is, maintaining volume areas on a lower time frame at higher prices. It is not always necessary to switch to a lower time frame. Very often, all these movements are visible on the time frame you are trading on, the one where you are determining the trend. If we pay attention to the vertical volume, the volume contained in these candles, we can see that several times attempts were made to push the price below this volume zone on relatively high volume, yet the price did not move lower. This indicates either a hidden buyer or simply a buyer accumulating a position at higher prices. Now, let's look at a Forex chart. Currently, we have the euro to US dollar pair. As we know, on Forex, we do not have real trading volumes since the market is not centralized, but still, we have tick volumes and this indicator works on them as well. We see the last upward movement of the pair from the range minimum and apply our volume profile. Accordingly, here we see that a supply zone forms at the highs, where volumes increase. That is, when volume rises at the highs during an upward movement, we understand that there is selling pressure here. At the same time, there is a struggle between sellers and buyers, and in this case, since the movement took off downward from here, the sellers temporarily won, and this creates a clear selling zone that we can mark precisely on our time frame. Understanding this, any upward trend potentially may end in this zone, and this zone can become the first point to consider taking profit. Currently, our volume profile is stretched up to this green bar. We extend it further and observe what happens. What happens is the following. In this zone, we also see slightly increased volume, so we mark this zone as our support level. If we continue to extend our volume profile, which needs to be done periodically during trading since it does not move automatically, we will see that this zone is actually the most voluminous, indicating clear buying activity. At the same time, we also have a seller zone, a buyer zone, and this tells us about the potential for further consolidation. In this case, once again, the movement moved upward on relatively high and increasing volume. Then the price corrected into this area, where one could consider opening long positions with the first target at resistance, from which we saw selling pressure. After that, the price from this resistance fell back to support, so we see a clear sideways movement. Oil will not escape us either, and at this moment, we have stretched the volume profile over the last upward movement, clearly seeing the areas where there was buying activity, here, and it is precisely in this area that we could expect a correction. The first correction only touched the upper boundary, then the price moved lower, resulting in a fake out. At the same time, one could switch to a lower time frame to see when this downward trend ends on the hourly chart. Again, the price exiting this zone upward and the retest of this area on a lower time frame indicated that the correction had indeed ended in the zone of previous buyer activity, and the movement had a chance to continue, which is exactly what happened with oil. If you have watched the video up to this point, please give it a like. I would really appreciate it. And if you have any questions, if anything is unclear or there are points that need clarification, be sure to write about it in the comments. I will answer all questions. Now, let us summarize the information that I have presented to you today. So, first of all, we need to determine what is happening on the market right now, whether it is a trend, consolidation, or some premises for a reversal. The volume profile will primarily help us with this. We open the instrument we are interested in on the trading time frame on which we plan to analyze and accordingly make trades, set stops, and calculate risks. We find the local extreme, and from the local minimum, we stretch our volume profile to the last local maximum, observing the result. Accordingly, the zones where the largest volume was traded can serve as support and resistance levels. Here, looking at the ruble, we clearly see consolidation. The last largest area of activity was around 77 rubles per dollar. There was a fake out of this level. Buyers tried several times to hold the price above it. After the fake out, the price was pushed upward. Again, at the highs, we did not see significant buying interest. The price returned to this level, broke it to the downside, retraced, and here we already see premises for a reversal. Everything primarily depends on which time frame you are trading, what goals you pursue, and how long you plan to hold positions. Briefly, we analyze the trend on our trading time frame, and then we look at longer-term targets on the higher time frame. For a 4-hour or daily time frame, by stretching the volume profile, we can see the longer-term potential for price movement, whether after a reversal or for the continuation of the upward trend. On a shorter time frame for the 4-hour chart, that is the hourly or 15-minute chart, we look at the premises for the end of a correction. Here, the volume profile also helps, which we deploy over the last trend, for example, a downward correction in this case. We observe zones of maximum position accumulation. Accordingly, here we see that this was the 77.5 ruble zone, and until this zone is broken upward, we do not see confirmation of movement higher. The selling pressure can still continue on this short-term chart, and therefore, we cannot speak of any completed correction on the higher or our trading 4-hour chart. If you have watched the video up to this point, it is worth giving it a like and subscribing to the channel so you don't miss similar videos. I am also waiting for your questions in the comments. Thank you all for your attention. Happy trading, and see you in the next video.